All right, hello and welcome and good evening, traders. It is Thursday, January 16th, 2025. Bit of a down day in the market as we consolidate and rest up from yesterday's move, which was a giant move to the upside on what I feel was not really very positive CPI data. CPI uh, moved from 2.7% to 2.9%. It's going the wrong way. Third month in a row, it's going higher. Inflation's increasing 3 months in a row, but yet, because we were maybe in line with expectations or something yesterday, that everybody thought, oh, this is great news, and the markets ran higher. Now, we made a ton of money yesterday. I will take it. I'm not going to argue with the market. You trade what you see, not what you think. Okay? News is typically just noise. The news yesterday, hey, CPI in line, even though some of the core numbers on auto insurance, housing, transportation were all absolutely terrible inflation numbers, which is what we need to live on. Those were not good numbers. The overall number went up, even though it was in line, and the markets celebrated like, it was Christmas all over again. We take it. I'm happy, but certainly don't think that's going to last longer. I'd love it to be moving higher, but we'll take what we get. And again, we trade what we see, not what we think. We kind of tune out the noise of most of the news here and just look at the price action. I think one of the keys today was we had that big move up yesterday, as you can see here. And there's a lot of stuff on this screen, so just bear with me on it. But we were in this downtrending channel, big move up, hit the top of the channel. Okay. We also today broke a little bit higher early, hit the 618 fib exactly, fell back into that channel with a down day. So ES dropped about 13 points today. So we did give back some yesterday. I really expected us to give back more. I thought we would come back here, probably a third to half of this wick. I thought we would come back. Maybe we still will. We'll see what happens. I just think yesterday was just so overdone. And I don't know why that number was bullish yesterday and shoot the market higher, but we'll take what we get on this. So anyway, I don't want to spend too much time on charting today. That's not the purpose of today's move, but we'll take what we see. If we're looking at our accounts quickly today, and I want to cover poor man's covered calls. So we're going to do a little bit of poor man's covered call trading here, but I'm going to do an income version of that trade that I really like that we've been doing in the Discord channel. So on the session today, yep, we moved up yesterday. We were up about 9 grand. Today we're up another $1,500 or so. So net licks back is up to 380. We started the year at 368. So we are now up a little over 3% already in the year. The market's up a little over 1%. We're up 3%, and our realized gains are about almost 5%. And I talked about it yesterday. There's some rolled hedges in this one number from yesterday, so it kind of inflates that a bit. That number will come down at the end of the month, but that still only affects the realized. The net lick just keeps rolling higher. On the investing account, we moved higher yet again as well. We're nicely up for the year. We're up almost 3%, and this is our longer term investing lazy trader account. We're up 2.5% on the year already, and it's only halfway through the first month. Our goal is typically about 1.5% a month in this account. We're shooting for 18 to maybe 20% a year on lazy type of investing, mostly naked puts. There's a few, mostly leaps, but some shorter term naked puts, maybe some wheel type strategy, but we have none of those running right now. If we do get assigned, but typically that's not what I want to do. I don't want to be that active. We've got some poor man covered calls, which are doing great. And then we've got just a couple, either 112 or Jade Lizard type trades that are out in time a bit. So this account doing great. I mean, can't complain with the market up 1.2. We're up 2.5 in a lazy account where we don't actively trade it day by day. So we did close out a covered call today for a loss. And everybody's, gets all wound up. And this is going to lead into what I'm talking about of, hey, you lost money on your covered call. Well, I did lose money on the covered call. Technically, that's correct. However, I made on this covered call $170 worth of extrinsic value that came out of this trade when I closed it. And because it went through my call, my long calls that I own went up by the same amount that this went up. Okay. So really, the net position has been negated because the intrinsic value of the covered call was offset by the increase in the long calls. Okay. So really, I just got to keep the premium, which is what I'm doing right now because as I've mentioned, and I just showed you on the chart, I think we're a little overdone. I'm expecting more of a pullback. I'm still, again, bullish but cautious. I really have a neutral look on where things are right now. I have a neutral look on the whole year. We could go up 10, 15%. We could go down 10, 15% by the end of the year. I have no idea. I just don't see, giant moves to the upside for sure after two big 20+% years. The downside, if something breaks, which maybe the Fed breaks something with with keeping rates higher, with the giant debt that the U.S. government's in, and who knows what else could happen, and who knows what Trump could say or do, what tariffs might do. We have a lot of unknowns on the year. I think that gives us kind of a neutral outlook, which for us, if we're neutral to slightly bearish, man, is this going to pay off? 2022, we were up 82% in a bear market. I'm hoping for the exact same thing this year. Okay, that's really going to pay off on our accounts. So let me talk briefly about poor man's covered calls and really the way I'm trading the poor man's covered call. So there's a couple different ways. You can look at this as, a way to buy quality at a cheaper price, okay, instead of buying QQQ or SPY or NVIDIA or a Tesla or a Google, Amazon, any of those, instead of buying those quality names at 500, 400, 600, 200, $300, I can buy the leap around 70 to 90 delta, 80 delta on the average. I can buy that for just a fraction of the money. So it gives me a chance to buy quality names at a lower price. And then uh, for some people on the poor man's covered call, we're selling covered calls out of the money, typically maybe somewhere in the 20, 30 delta range. In a bullish market, I'm probably closer to 15 delta. In a neutral market, I'm probably closer to about 20 to 30 delta. And in a bearish market, I'm probably closer to a 50, 60, 70 delta. And yes, those are actually in the money. Okay. But that's helping offset any losses on the long calls on the leaps. Okay. But what we're playing for me, okay, if you want the price appreciation, you're selling out of the money, you're letting the leaps go up underneath, okay, you're getting your premium here. And even if we're rising, we still let these expire worthless. We keep all the premium and the extrinsic or the appreciation on the long calls just keeps growing. That's fine and dandy. And there's a place for that. There's a place for that in the lazy trader portfolio. I think it's a great way to get into quality names at an inexpensive price, okay, and then sell pretty decently out of the money calls just to keep generating a little bit of income while we let these things appreciate over the period of time here. And we can get in at a fairly low price. So even if we come down, go up, what have you, we can use the covered calls to offset some of that premium that we paid for the long calls. Anyway, long story short, most poor man's covered calls run that way. However, there's also a trading way to do poor man's covered calls. And we've been doing this for quite some time in our Discord. We've been doing it on MicroStrategy. We've been doing it on IBIT. We've been doing it on NVIDIA. We've been doing it on Chipotle. We've been doing it on QQQ. So we've been doing it on a variety of these different underlyings. But I want to explain really how that works for you today. I'm not going to get into poor man's covered calls. You can research that. There's tons of stuff out there. Maybe I'll put out something on poor man covered calls sooner than later just to cover some of that. But really, what I want to do is I want to generate weekly income using my poor man's covered calls. Okay, I want to use it as an income strategy, not a way to buy cheap, way to buy quality at a cheaper price and get that appreciation in there. Time and place for that. I'm looking at it as a weekly income generator. Okay. I don't need a ton of cash. I can do this in smaller accounts as well. And I can generate pretty decent monthly returns in here. I'm not looking for these. I don't know how people keep talking about 10% a month, all this. You know what? More power to you if you're generating 10% a month. If you're doing 10% a month, there's no reason for you to be posting anything online. Okay. I would be on vacation in the Bahamas. I'm more conservative. I'm looking for 2 to 3% a month. Okay. Hey, if I got 10% a month, it'd be awesome. Okay. And yes, it's happened, but no, it's not the norm. And nor am I going to tell people that you can retire on $100,000 wheeling Palantir and making 10% for the rest of your life. Okay. It's not going to happen, folks. Okay. You might be able to generate a ton of money on selling calls, okay? But if the underlying is dropping and you're not getting assigned or you're not getting those calls, the shares called away, okay, that means your asset value is dropping while you're generating income, okay? And if you keep selling out of the money income on those, okay, you're not going to make a ton, okay? The way I'm showing you is it's just strictly an income play. It's an income cash grab. That's all I'm looking for. I'm just trying to get the extrinsic value of these out. And we've been doing this for a couple of years. Like I said, on some of these names, you can do these on a little higher vol names. I don't like trading highly volatile stuff. I really stay away from those. I have 10 stocks that I check into and that I'll trade most of the time. I think I've shared some of those. If not, I share those with our members as well. But there's only about 10 stocks that I trade, plus just the straight normal ETFs, which is where I really focus most of my money. I would say 60 to 70% of everything I do is in the S&P 500 somewhere, whether it's S&P 500 futures, SPY, SPY leaps, what have you. That's where the majority of my trading is done. You can do individual stocks. I just hate earnings. I hate the volatility of stocks. I only want high quality stuff that does go up over time. And you just saw what can happen too if you miss earnings, misstate something. Who knows what can happen? You can get absolutely murdered. Okay, very hard to murder the S&P or the QQQ. Anyway, let's go quickly because I want to wrap this up quick for you. So leap options, long-term equity anticipation securities, those are longer dated calls that we buy, typically out a year for most people. I like to do anywhere from 6 months to 12 to 18 months, anywhere in there, depending on my view of the market. If we're at the bottom of maybe Bollinger Bands, we've pulled back significantly, we've had a nice sell-off, we're at a 3 ATR, something like that, or our RSI is oversold. If we're in those kind of areas, then I'm typically going to go a little bit longer out. If we're kind of in the middle of those ranges, I'm going to go shorter, like 18 months or 8 months, 6 months, something like that. Anyway, so you're buying the long call leaps, okay? And then we're going to sell. And what I'm going to sell is I'm going to sell at the money or just slightly in or out of the money leaps based upon what I'm seeing in the markets right now. But I really want to sell at the money. I don't care about the price appreciation. I'm here to generate the cash flow from the extrinsic value. Okay? That's really all I'm doing. Again, this is an income trade. This is not a long-term appreciation style trade. Make some passive income. Okay? There's nothing passive about selling weekly options. Okay, that's active trading, folks. Okay, so anyone says, "Oh, I'll make passive income 10% a month," it's crazy. Okay, you can't do that by being passive and sitting back and doing no work. Okay, you got to look at the charts. You got to understand the markets. You got to understand your underlyings, and you got to put trades on, somewhat frequently. I find it hard to do this if you're doing it on a 30-day trade basis. I like to do these on a 7-day, 4 to 7 days, maybe 11 days, depending on when in the week we do this. SPY, QQQ, very high quality names that typically go up over time. Okay. And once I buy that leap, I'm going to sell that at the money call. If things look bearish, I'm going to sell slightly in the money, which gives me downside protection. If we're pretty bullish, I'm going to be selling more out of the money or at the money. Okay. Call. So really depends on what the charts are showing me and what my bias is. All right, and then typically I'm going to do these roughly on Fridays or so. They usually expire on Friday. I'm selling the next week out. Sometimes I can take them off earlier, sometime, and then I'll go with an 11 day or a 12 day because it gave me all my extrinsic in just a couple days. Who knows? But typically I'm just closing those every week, pulling out all the extrinsic that I can. I may close it early, 90% whatever of the extrinsic. Once I get the extrinsic value, the premium out of that premium, even if there's intrinsic and I'm going to take a loss on the actual call, that means that my leaps are actually going up if I have intrinsic value on the covered call. So I'm in great shape either way because I'm just looking for the cash grab. Okay, that's all it is. And you can do this on a variety of underlyings. I just like the high quality. So let's take a look really quick at putting one of these things on. And QQQ, and I'll get off the video here. Excuse me. QQQ is a good one. We looked at this today, and I want to give you just a quick example, and then we'll let you guys go on the session today. But if I'm going to do this on the Qs, I'm going to go out about 365 days. I'm going to go somewhere around that 80-ish delta. I could go higher or lower depending on where we are. I like the 400 strike. I think that's a good area to be in. It happens to be the 80 delta. So these two things work out well. I think the market stays above 400. 400 is more than a 20% down move. So I still think this is a good area. And I'm going to buy this leap. Okay. This leap is going to cost me $13,840. Okay. So let's just say $14,000. Okay. So it's going to cost me $14,000 to buy this. Yes, my buying power, it's only going to use up about $6,000, but uh, really, let's just use the actual value of buying this. This is a portfolio margin account. Okay, so we're going to save a good amount on this thing on buying power, but I'm not going to overuse it. Okay, if I lose on this entire trade, I will lose, and typically, too, my protection on here is about 30%. If this leap loses 30% of its value, which means it goes from, 138 to 95 or something, I'm going to get out of this. That means the market has just been dropping, and we're going to be losing uh, money on the underlying. I'll get out. All right. I typically won't wait to take assignment. I won't keep trying to sell calls at bad pricing, but we'll see how it goes. But that's going to be the overall trade. All right, so let's just use this. $13,800 it cost me to buy this. Okay, then what I'm going to do is going to turn around and I'm going to sell a 7 DTE at the money. You can be at, slightly in. I mean, either one of these would be fine. Uh, Here, if we sold the 513, we would be in the money by 8 cents. So instead of getting 440, we're going to get, 436 or something like that. The mid price on this is 446. All right. So by selling the at the money call, let's just use this one. Let's use this one. This is a good one to use. Let's just say this is $450 or so. Okay. I know we may not get filled for that, but just play along here. $450 is what we take in for 7 days. So $450 on the $14,000 that I paid for that leap, that's like a 3% move. Okay. If the market drops, I keep all of that. Okay. And I'm paying down my basis. Okay. If we do this every week, we should be able to generate 300, $400 or so a week on average. If we generate $400 a week, okay, for 52 weeks, we're going to generate over $20,000 in cash flow just from the extrinsic value. I don't care if we get blown through to the upside. I don't care if things fall to the downside. All I know is I'm generating $20,000 over the course of a year selling at the money. Okay. If we move to the upside and this thing runs up to, let's just say from 513 here, it runs up to 518 and we go $5 then in the money. Okay, it's going to close for $5 on expiration, but I already took in 400 uh, on this thing. Okay, so the extrinsic value of this thing, I'm going to lose 500, but I'll take in 400 to begin with, and my leaps are going to go up around 5 points as well, another 500 points higher. So the leaps going up $500 and the call going up losing $500 by going in the money are going to offset, and I still get to make 400 bucks in cash. Over the course of a year, we're going to have ups and downs in the market, but in the end, we're going to keep the extrinsic value always of these items. So if we're selling right at the money, it's all extrinsic. Okay, $394 on this trade or 396. It's all extrinsic value that we're going to take in on this. Okay. The other nice thing is while this, and let's go back real quick and let me go put on the 365 day, 400 long. Okay. If we look at this entire trade, this is a Vega positive trade, 113 positive Vegas in here. What's great about that is if we get a big vol spike, this thing's going to pay even more. Okay, so because of the long Vega of the leaps on here, if volatility spikes, we win. Okay, so we're going to win nicely on any volatility spikes. These things really help your portfolio with the Vega factor. I'm mixing some of these in with our futures and a PM account, and it gives me a little bit of positive Vega on these. So even if some of the futures may expand due to volatility, these will also increase in value to offset some of the losses on those. We do have volatility hedges, blah, blah, blah. So I feel we're pretty good, but I do like this trade for the fact that it's Vega positive here. All right. So anyway, there's the idea. I'm sorry, I think I did today's. I meant to do tomorrow. So I meant to do, I'm sorry, I did 7 DTE. So yeah, 400 bucks or so, 400 bucks a week for 52 weeks. I will probably close out if we drop 30% or more of the value of the leaps. I would close the trade for a loss, move on, do something else. But for the most part, this is a cash generating strategy. It's not built, okay, for you to be looking for price appreciation or any of those things. It is a cash grab. It is an income generating strategy. I hope this was helpful for you. If you like this video, give a thumbs up. If you're not a member of the YouTube subscriber base here, go ahead and subscribe. Love to have you along. And if you want to see some of these trades in action, you can certainly jump into the Discord and watch us put some of these on. We are at the top, like I showed you earlier. We are at the top. Okay. We're at the top of the week, up here. It doesn't make sense to start buying things when we're way up in the nosebleeds. We're at the top of this channel as well. I'd like to see some pullback. I'd like to see us dip below, maybe the 21 or the 50-day moving average, maybe come back in here. I'd love to see us test the bottom of the Bollinger Bands on the daily, somewhere around this 5,800. I think that's where I can get another tranche of these, QQQ. I'm going to do some on SPY. We're already doing them on IBIT every single day. We've been doing them on MicroStrategy for a while, but I want that to calm down. I don't like to add these poor man's covered calls because I don't like to add the leaps at highs. I want a pullback so we can get a better deal on the longer calls, giving us a little bit more safety, only high quality stuff, none of this Riot or Mara or Palantir or any of these other names right now that are overextended, or Tesla even though that's coming back. I want something to come back a little bit more. I want high quality. I do think Palantir is a good quality company. It's just way too expensive right now to do this on. I think you want a good quality stock. The two right now that I think are best value, NVIDIA, Google, and then you've got S&P and the Qs, or you could do TQQQ as well. I'm also doing TNA on these. Let's see if there's anything else that we're running this through. Um, we're doing NVIDIA as well. So, and these give us great opportunities, okay, over the long haul. But any pullback is a was a great way to start these trades, okay, and start generating income today. Hope this was helpful. You guys take care. Have a great rest of your evening, and we'll talk to you later. Bye bye.